I had a client message me in a panic. She's a freelance designer earning around £65,000 a year, and she said, "I've had a letter from HMRC. Have I done something wrong? Am I going to get fined?" The answer was no. She had not done anything wrong. She just did not realize that making tax digital is now here for many sole traders and landlords. And if you are in the same position, this video is for you. Because if you are self-employed or you earn rental income, this is not something to ignore and hope it goes away. From 6th April 2026, many people will need to keep digital records and send HMRC quarterly updates using recognized software. HMRC has said around 864,000 sole traders and landlords are affected in this first phase. So in the next few minutes, I'm going to make this simple. By the end of this video, you will know whether this affects you when it starts, what you need to do, and what mistakes to avoid. Let's get into it. I'm Zoe, a qualified accountant. So first, what is making tax digital? Making tax digital, or MTD, means certain sole traders and landlords must keep their income and expenses digitally and send regular updates to HMRC. And the key thing is, this must be done using approved software. Now, if you are anything like some of my clients, as soon as you hear the words approved software, one of your first questions is, how much is this going to cost me now? And honestly, that is a fair question, but don't panic. MTD does not mean you are paying tax 4 times a year, and it does not mean you are submitting 4 full tax returns. It simply means your records must be kept digitally and updates must be sent to HMRC during the year. So in plain English, no more guessing everything at the end of the year, no more mystery receipts, and no more January panic trying to remember what that £47.80 payment was for. That is the main idea. It is not something to fear, but it is something you need to prepare for. Now let's get to the part everybody really wants to know. Are you in, or are you safe for now? Because this is where many people get caught out. You might think, my profit is not that high, so this probably does not affect me. But be careful. For making tax digital, HMRC is not looking at your profit first. It is looking at your income before expenses. So let's say your income is £60,000. Then after your expenses, your profit is only £35,000. You might think, well, surely I'm under the limit. But no, for the MTD threshold, HMRC is looking at the £60,000 income figure. That is the number HMRC will look at first. Now, here are the dates you need to know. If your income is over £50,000, MTD starts from the 6th of April 2026. If your income is over £30,000, MTD starts from the 6th of April 2027. And if your income is over £20,000, MTD starts from the 6th of April 2028. So even if you are not affected straight away, do not assume this will never apply to you. Over time, more people are being brought into the system. And here is another part people miss. If you have more than one income source that counts for MTD, you need to add them together. So if you have £30,000 from one source and £25,000 from another, you cannot say, well, neither one is over £50,000. Together, they are £55,000, and that could bring you in from April 2026. So the simple test is this. Do not just look at your profit. Do not look at each income source on its own. Look at the total income that counts for MTD, because that is the number HMRC will look at first. A quick reminder from me to you. If you're finding this helpful, please subscribe. It's free and it really supports the channel, and definitely easier than dealing with taxes. Now, let's continue learning. Now, I know what you're thinking. How would HMRC even know if this applies to me? Here's how it works. HMRC will look into your self-assessment tax return and check whether your income clears that threshold. For the April 2026 deadline, they're looking specifically at your 2024 to 25 actual tax return, and if your income exceeds the threshold, HMRC will write to you. But here's where I need you to really pay attention. Bonus tip. Do not sit around and wait for a letter, because here's the trap so many people are going to fall into. They believe if they do not receive a letter, it's not their problem and they are fine. That is a dangerous assumption. It is your responsibility to check, not HMRC. Whether a letter lands on your doormat or not, ignorance is not a defense. So if your income is anywhere near that threshold, my advice, take action now. Let me bring this to life with some real examples, because the numbers matter here. Example 1. You're self-employed, pulling in £60,000 a year. That puts you straight over the £50,000 threshold. So you're almost certainly in the first wave, starting 6th April 2026. No question about it. Example 2. Now this one catches a lot of people off guard. You earn £30,000 from self-employment and £25,000 from a rental property. Separately, both look fine, both look safe. But HMRC doesn't look at them separately. They add them together. That's £55,000 combined, and that means you're in from April 2026 as well. And if you jointly own that rental property, it's your share of the rental income that counts, not the full amount, just your slice. Example 3. You're a consultant earning £35,000. Right now, you're under the threshold, so you might be thinking you're safe, and for 2026, you probably are. But when the threshold drops to over £30,000 in April 2027, that changes. You could be pulled in a year later than you expected. Example 4. You're a landlord with £22,000 in rental income. Again, not April 2026 and 4, but April 2028 could be your moment. It's still coming. Now, let's talk software, and this part actually matters. HMRC is not going to do your bookkeeping for you. That has never been their job, and it never will be. So if you're stepping into making tax digital for income tax, you need software that plays by the new rules. We're talking digital records, quarterly updates, a proper year-end process, all of it. But here's where people go wrong. They just grab the first name they've heard of and call it a day. Don't do that. Instead, run every option through these 5 filters. Number 1, compatibility. Does it actually work with HMRC's MTD for income tax system? Non-negotiable. Full stop. Number 2, suitability. A sole trader and a landlord are not the same. Make sure the software fits your situation, not someone else's. Number 3, ease of use. Because if it feels like solving a puzzle every time you log in, you won't use it, and software you avoid is software that fails you. Number 4, bank connection. If it links directly to your bank, it saves you time, cuts out manual entry, and removes a whole layer of human error. Number 5, support. Because things go wrong. They always do, and when they do, you want answers fast, not a 3-day wait on an email ticket. Now, I know what some of you are thinking. Can I just use a spreadsheet? Good news, spreadsheets are not dead. They are not banned outright. In some cases, they can still be part of the process, but, and this is important, they usually need to connect properly with MTD-compatible software to count. So stop asking, can I carry on as before? Start asking, does my current system actually meet the MTD rules? That is the right question, and the time to answer it is now, not the week before your first quarterly deadline. When people hear quarterly updates, the first thing they think is, wait, does that replace my tax return? No, absolutely not. Your tax return still happens. After the tax year ends, you still need to review the full year, check the final figures, make any adjustments, and confirm your actual tax position. Quarterly updates are only one part of the process. The year-end step is still essential. And here is another thing people get wrong. They think making tax digital means your tax bill is automatically split into 4 equal payments during the year. It does not work like that. Your self-assessment payment deadlines have not changed. That 31st January deadline is still there, still important, and still something you need to plan for. So here is the simple version, and I want you to remember this. Quarterly updates mean reporting during the year. The year-end process means finalizing your tax. You need both, and you need both done properly. And let's be honest, HMRC does not play around with deadlines. If you file late, pay late, or ignore the rules, penalties can come quicker than you expect. But don't panic. HMRC has said that for people required to use MTD from 6th April 2026, penalty points for late quarterly updates will not apply during the first tax year, 2026 to 27. However, that does not mean you can ignore the rules. It does not mean I can leave everything for a year. You still need to keep digital records. You still need to get used to the software. And you still need to deal with your tax return and tax payments properly. So yes, there may be some breathing space focus on one part of the system, but this is still the time to build good habits, because bad record keeping can become expensive very quickly. So what should you do now? Step 1. Check your income. Look at your self-employment income and property income and work out whether you are over the relevant threshold. Remember, it is income, not profit. Step 2. Check whether your income sources need to be combined. If you are both self-employed and a landlord, look at the total figure together. Step 3. Start keeping better records now. Do not wait until you are under pressure. Start getting used to recording your income and expenses regularly. Step 4. Choose your software early. Make sure it is suitable for your situation and works with HMRC's MTD system. Step 5. Speak to your accountant or bookkeeper if you are unsure. This is especially important if you have mixed income, joint property, foreign property income, or records that are not well organized. The people who will cope best with making tax digital are not the people who panic at the last minute. They are the people who prepare early. So here is the truth. Making tax digital is not the end of the world, but it is also not something you can ignore and hope it disappears. Because if you are affected, tax is no longer just a once-a-year job. HMRC now wants digital records and regular updates during the year. So please do not wait until you get a letter. Do not wait until your accountant is chasing you. And definitely do not wait until the deadline is right in front of you. Check whether this applies to you, get your records in order, choose the right software, and give yourself plenty of time to adjust, because the people who prepare early will feel in control. If you found this helpful, feel free to watch the video again or share it with anyone who might need help. And don't forget to like, subscribe. I'll see you in the next video. Many thanks for watching.